Hey everybody, Chris here. This is the market update for November. I hope you and your family are doing well and enjoying this beautiful early rain that we're getting. So we're going to jump right in. There's quite a few topics to cover right now. We're going to talk about mortgage rates, where they're at, where they're headed, a little bit about housing, and we're going to touch on inflation. First thing we want to talk about is in November, the Federal Reserve, has made a decision to start pulling back on their quantitative easing, or basically their asset purchasing program that has contributed to artificially keeping mortgage rates low. And here in November, we have seen rates rise over the last month, and heading into the first and second quarter of 2022, the what we're projecting is that we will see rates continue to rise. Now, we're not talking about rates going up by a lot. I mean, we're talking maybe 3.5, maybe in the high threes. But if we look back, a year ago, while we were in the middle of the pandemic, rates were in the mid to high twos. So that is a 1% change year over year if they do in fact lead to that level. We'll definitely keep you updated on that, but that's something we wanted to touch on. The reason why the Federal Reserve is wanting to make some changes is twofold. Number one, they think the economy is hot, and inflation is a factor. And so I don't have to tell many of you about inflation. Most of us have seen the rising costs of things due to the supply chain issues. Not a lot of people working because they've been out of work for a multitude of reasons. And that'll really be the thing that is going to be a contributor to what happens with mortgage rates, home prices, etc. Now, there are still a lot of people that are buying a house or considering buying a house that are thinking that home prices are going to fall and that we're going to experience another housing crash. And I just got to say, I don't really think that that is the case. And if someone's going to wait for a housing crash, they could be waiting for a while. And here's why. If you look at what's going on right now with our current housing market, we always have to consider what the demand is and compare it to the supply. Now, if you go back to 2006, which was right before the Great Recession started, and we saw the housing crash of 2007 and 8, there's a couple things that existed during that time that are much different than what we're having today. Now, first and foremost, there's 12 million more households in 2021 than there was in 2006. There's only 3 million more homes for sale in the nation than there was in 2006. So there's still simply not enough homes for people to buy or for people to rent. And as long as those conditions exist, you're still going to have a lot of pressure on rents, which is why we're seeing rents go up so much. Rents in California have gone up almost 20% year over year in many cases. And you're going to see you're going to still see home prices go up because there's simply more people that need to buy homes and need to rent homes than there are homes to purchase or rent. And one of the other problems is builders cannot build homes quick enough, and the cost of those building supplies continues to rise, and regulation, or the government basically changing rules for home builders to build, is continuing to make building homes more expensive. I mean, in 2021 alone, all homes that are built have to have solar in California. And that's one of many regulations that still exist. So until we see deregulation and we see the cost of goods and supplies come down, you're not going to see those replacement homes that need to come to the market to meet the demand for the families that need to have a home to live and raise their family in. And that is not a problem that anyone thinks is going to get fixed anytime soon, which is why most experts are predicting that 2022 is still going to be a pretty hot housing market. Now, if we look at where the housing market is right now for Shasta County, we do have more inventory than we had a year ago. It's definitely an easier time to buy than it was 6 months ago or even a year ago. We're not seeing the migration of all the people moving around from the pandemic. So most people have settled, but there still are a lot of people moving into Shasta County, and we still have, if a house is priced right, we're still seeing multiple offers, and we're still seeing sellers seeing their home selling above asking price. So right now it's a pretty good time to buy for compared to what it was 6 months ago. But as we head into next year and we get into the spring and summertime, most experts are predicting it's still going to be a pretty hot market. Now let's talk about rents. Rents are continuing to rise. There's still all-time low vacancies with most rental agencies. And this isn't just a trend for California. We have a lot of clients that are moving out of state, Tennessee, Idaho, Texas, all the hot spots. And most of my clients are reporting back that they're seeing very similar conditions in those markets. The real estate is expensive and there's not a lot of rentals available. So this isn't a trend that's specific or unique to our area. It's happening everywhere. So those are kind of the things that we're seeing right now. What we want to keep an eye on as we move forward is mortgage rates, continue to watch inflation. Our Federal Reserve is saying that inflation is still transitory, meaning it will fade at some point, and that most of the inflation we're seeing is because of the supply chain problems and just not being able to get goods and services as quickly as they used to be able to. And as that problem solves, we should see hopefully the costs of things come down, and that'll be one thing that we'll want to watch going forward. So do we think that rates are going to go up super high? We don't. Yesterday when the Federal Reserve made that decision, rates actually didn't move by much. We expected they might, but they're actually still relatively low. Currently, rates are somewhere between 3 and 3.5, depending on the type of loan you're doing, credit score, et cetera. And so those are some of the things that we're watching. As always, if there's any questions you have about anything real estate related, if you're considering a refinance, for cash out, a lot of people right now are taking cash out of their property to pay off debt, to purchase other investments, to put some reserves in the bank, to remodel their home. Those are things that we can talk about. If you're someone who's thinking about moving out of state, we do have a lot of clients that are doing that for a multitude of reasons. We are licensed in 42 states, so we'd love to help you there. Or for anything else, I'm always available to you. Again, I hope you and your family are doing well. Hope you have a great Thanksgiving, and we'll talk to you soon.